Welcome back to the Raw Selection Private Equity Podcast. Joining us today is Brian Gustason, an operating partner and PE-backed operator. Today we're going deep dive into the lower middle market and building your go-to-market strategy. Let's dive in. Brian, can you share with us a brief insight into you, please?
Yes, 25 years of operating experience, operating and advisory experience. Started off in consulting, like many people in the PE world, both Booz Allen and PwC. Moved into an operator role, including actually a sales-oriented role, which was a great start for me in terms of giving me really good, solid foundation for go-to-market. Worked in that VP of sales and marketing type roles for a number of years, and then moved into the PE space. Have worked in interim roles as well as growth-related projects. I'm currently working with Craig Group, which is based out of Houston. It's an advisory firm working with PE-backed lower middle market businesses to help them accelerate organic revenue growth, which, as you know, is very important for valuations. And we do the full go-to-market continuum, so marketing, sales, and customer success improvement to accelerate organic revenue growth.
Perfect. What's one mistake that you see private equity firms or portfolio companies making, and what would you suggest to correct them?
I feel like in many cases, PE firms, when they're starting their due diligence process, they're heavily reliant on traditional commercial due diligence. And in some cases, I think that that's not always effective in terms of measuring the growth potential of an acquisition target. I do feel like traditional commercial due diligence is superficial in nature and really doesn't measure effectively the ability for these firms to grow. And so I think more go-to-market focused due diligence would be helpful on the front end to make sure that the business can actually grow and meet the investment thesis.
Okay, so let's dive into that a little bit more detail. So you mentioned like traditional commercial due diligence. What is one or two things that you would suggest that firms should do differently or assess or look into or look for that would improve that process?
Right. So, I typically work in the lower middle market area. And so in many cases, these firms really don't have mature go-to-market infrastructure, expertise, or teams. And so in many cases, the traditional commercial due diligence will be backwards looking in terms of previous growth or previous capabilities, and not really look forward in terms of whether the revenue engine can actually scale. And I think that there are ways to do that even in very tight timeframes, right? Due diligence, you may only have, I don't know, 5 to 6 week window to really evaluate the growth potential of the acquisition target. I think that teams can do a lot better by looking and really evaluating the scalability of the revenue engine going forward, and I don't see a lot of them doing that. I think that's really why my team gets a lot of work as a result of that, because they're not evaluating the growth potential of the business, the ability of the business to achieve the desired growth rates in year 1 and 2. In many cases, they're not evaluating that properly upfront.
Makes sense. So let's dive into a go-to-market strategy. If you can give us an example of keep it confidential, obviously, but something where you've been involved in, you deployed, what you did, and we can dive into kind of what you learned, what the result was as well.
Right. So a great example would be um, a recent project that I worked on, which was it's an industrial distributor, a value added distributor, and relatively small, $30 million in revenue. The when and It was a founder led business. So the founder had developed relationships and really hadn't developed, effective processes or systems. And so the PE firm acquired the business and determined that the business really didn't have a go-to-market strategy in place. It was sort of, ad hoc in nature and sort of opportunistic. So it's much better, as you would think, to have a structured well thought out go to market strategy and implementation plan. So I was involved in developing that. So what we learned was that, they, again, primarily a relationship based sales, didn't really have much marketing, did not have a structured sales process, and then unfortunately was in a way sort of neglecting its existing customer base. So really didn't have much in terms of customer success, driving revenue with existing customers. And so what we did was we looked at it from all three of those angles. How could we develop a growth plan that incorporated better marketing, better sales, and then better after sales or customer success? And so we worked with this business initially on the marketing side to identify what are called ideal customer profiles. You need to ensure that you're aiming at the right markets, the right personas, et cetera, that will enable faster growth. So we actually prioritize, instead of just accepting any type of business that walked in the door, we help them prioritize to 5 ICPs or 5 ideal customer profiles. So we're able to do that. So for better aiming, then we evaluated their lead generation, their demand generation and lead generation. Were they just accepting any leads that walk through the door, or could they better qualify leads up front, develop, a much higher quality lead flow for their sales team? So the marketing side really was developing the better aiming, the better lead generation, highly qualified leads. And then from a sales perspective, it was actually developing a sales process, an actual sales process that could be trained, that could be developed for training for their sales team, so that would not be reliant on the founder like they were previously. And then you develop sales enablement tools like a pitch deck, pitch decks that were focused on the specific markets, verticals that we identified, the ICPs, and also a better coaching so that we could develop these team members, these sales team members, into better closers. And so after we did that, then again, we focused on what do you do with your existing customer base, right? So we learned that they didn't have an onboarding process for their new customers. They didn't have a training process. They didn't have a way to measure customer health, scorecards, and so forth. And they really didn't have effective upsell or cross-sell motions. They were just relying on the customer to come to them if they needed something, as opposed to being more proactive about upselling and cross-selling. So again, we worked on marketing, sales, and customer success, as well as data, right? We helped them stand up an effective CRM so that they could segment their opportunities. The net result of this was much better, highly qualified leads coming in the door, inbound and outbound type leads. The close rates went up. Their average contract values went up, meaning that they were selling more, more items. Average order values were increasing, and their customer churn was reduced. Customers would stay longer, which benefited the lifetime customer value. And the end of the day, the firm has been growing much faster as a result of this structured go-to-market strategy and implementation.
Perfect. Well, let's dive into that in a little bit more details. You mentioned marketing first. You mentioned the identification of the ideal customer profile, customer avatar. How did you go about identifying that? How did you find out who the right people to sell to were?
Well, a lot of it is looking at their own data and to understand, who are their best customers? Do they share specific characteristics? If you accept any customer that walks in the door, it can be very difficult, not only from, just your own resources, allocating your own resources, but just being efficient. So it was identifying where did they have legitimate strengths and legitimate expertise. That was one aspect of identifying. And then what we did was we developed a process to evaluate and prioritize these markets. The process that we used is it's a very basic statistical process called the analytic hierarchy process, AHP. And what you do is you can develop criteria to evaluate markets. You weight those criteria. Maybe some markets are more important than others. And then you have the executive team members run through and weight these, actually run through this process of prioritizing these markets based on the criteria, the weighted criteria that have been set. And so you end up, instead of, let's say you start with 10 potential markets, you can work with the teams to prioritize the top four based on these established criteria. So that's one way to do it, but you do that in conjunction with looking at the data. Which verticals have the most growth opportunities? Where are the most competitors where you may not have the ability to offer premium pricing? If it's really highly contested markets, maybe we don't focus on that market. And so there are many different ways to evaluate, the different opportunities. But ideally, you want to come up with, say, 4 to 5 markets that where your strengths will be valued by that customer base and where you have credibility. So if you're really strong in the construction market in the past, it's going to be easier to sell more in the future. And you can use what's called peer selling. It's easier to sell to more law firms if you already have significant law firm selling experience, right? So all of this goes into prioritizing the markets where you want to double down and identifying those markets that are weak that you want to either, suspend or get out of entirely.
Makes sense. And then what parameters you mentioned about the qualification of leads? So what parameters did you put in place to qualify leads?
Again, a lot of this is tied to the ideal customer profile, right? The leads that who will actually value what you offer. You want to work with those, and think about it. If we have more highly qualified leads, it'll be easier to sell down the line, right? Because they'll value what you say. So we look at a wide variety of things. We look at again the data. We look at win loss analysis, for example. Where are you winning? Where are you losing? And clearly, if you're winning, why are you winning? What is it about that specific lead? Is it a specific vertical? Is it a specific message that you are offering? Or are there specific team members, for example, who have expertise? Maybe you should be routing more of a specific type of lead to a sales team member because they have expertise and they can close them very effectively. So you're constantly evaluating lead sources, and deciding where to double down. Where should you put more money in terms of paid search or certain events, for example, to get more of those leads. I also feel like we talk about a really interesting technique called pre-suasion. It's not persuasion; it's pre-suasion. And what that is that where you're shaping the context of the meeting or the materials that you're sending out ahead of ever talking to this lead in a sales conversation. You're shaping the conversation ahead of time. And so a lot of that is determining what's resonating and should I send out more of this content ahead of time because it's priming these leads ahead of the sales calls. So again, a lot of this is testing which lead sources are effective, which markets are effective, and of your team members, who's really effective at closing specific types of leads, because I want to funnel more of those leads to those people.
You mentioned about materials and getting content to somebody first. What have you typically seen shared that typically works?
It's interesting. I feel like if you are if you have a sales meeting set up, it's very effective to send information ahead of that meeting to shape your strengths, but also the topics that you'll discuss in that meeting. And that again goes down to that technique that I referred to called pre-suasion. How can I shape the meeting ahead of the meeting, right? And you can do so by having information links on your website that relate to specific very relevant topics, or you can send out specific content that you wish to discuss during the meeting ahead of time. And so essentially you are priming this sales opportunity or this lead ahead of your discussion to focus on the topics that you want to talk about. So that's an example of materials. That's a way to improve the odds of conversion ahead of time. And we work with a lot of companies on using persuasion in marketing, sales, and customer success. So it's about improving the odds that your conversation will be more effective and will focus on your strengths ahead of time.
So moving on to your sales process, what did the sales process look like once deployed in this? We'll stick with the kind of first time P backed business.
So typically they lack a sales process at all, right? In many cases, I think I read an interesting quote, a Forbes article quote that in 2024 that was 60% of all B2B salespeople lack any formal sales training. And 60%, and just think about that. I mean, that's an astounding number. And so in lower middle market businesses, I mean, many cases they don't have the resources to provide any training. And so a challenge is that it's sort of like the Wild West, right? Where you will have if it's not a sales led or a founder led approach where the founder is leading most sales calls, you'll have salespeople who are very salesy, but lack any sales process at all. So in that case, what you have to do is identify a sales process, set up a sales process that can be measured, that has steps that will align to a CRM that you will hopefully, in many cases, these businesses actually don't have an effective CRM or they have spreadsheets. So you have to set up a sales process that'll align well to a CRM so that you can measure the progression of the leads through the sales funnel. And so, in doing so, but it's very much helping to provide some structure to the sales team in terms of can they have an effective sales discovery, for example, with if it's a consultative or a technical sale, can they lead with an effective sales discovery where they are asking the right questions? Can they handle objections effectively? Can they close a sales opportunity effectively? Can they follow up effectively? A lot of salespeople drop the ball. They don't follow up after the initial sales discussion with the right information or the right case studies or whatever. So, developing an effective sales process is very important. And in many cases, a lot of these lower middle market businesses don't have a sales process to start with. So, they do see an immediate bump once a process is installed and the sales team is trained effectively on that sales process. It's much better than a random, again, wild, wild west type of situation.
So when we look at that kind of sales process and everything documented, how does that look from a documentation perspective? I know what we've done internally with we've put an LMS system in and everything's procedural based and lots of metrics. What does very good look like? What does exceptional look like in a low middle market P-back business from a sales process documentation?
Right, and people talk about playbooks, and I'm very much in favor of a playbook. You want something that's referenceable, and you want it to be online, and digestible by the sales team members on demand. So maybe ahead of a sales call, they can refresh and think about the following the process. So yes, the sales organizations that warrant the highest multiples tend to be those that have a structured process that includes a sales playbook. And by the way, the sales playbook is not static in nature, right? Where it's the playbook for years and years and years. It can change and in fact, it should be revisited probably at least every 6 months in terms of relevance. Sales messaging changes, right? The sales questions, effective questions change. So you want to have a sales playbook that takes the sales team from start to finish, but that is adaptable, that provides good scenario examples of common objections and suggested answers, and then best practice techniques. So for the top salespeople on the team, I always like to better understand what is their process. What are they saying? What are they doing to close more? Is it just a favorable territory, or do they have a technique? Do they have a buzzwords that they use, right? And so, really codifying that effectively, making sure that it's available to all team members and also available in training. When you bring on a new team member, you want to ramp them as quickly as possible. So they should have really effective sales playbook available to them that they can use at the beginning as well as before every sales call. And again, a sales manager should use it effectively after sales calls to evaluate whether did the salesperson actually follow the process? Did they use the right, words? Fortunately, there are many AI tools out there also that can be used to evaluate whether sales team members are, using the right questioning, the right discovery, or handling objections effectively. That should be in line with the current sales playbook as well. And I will say too, Alex, that the same goes for account managers on the customer success side. They too should have a playbook, running the gamut from onboarding, how to do an effective onboarding, to ensuring adoption of your solution, to effective QBRs, quarterly business reviews, asking the right questions. And then lastly, effective upsell and cross sell techniques. I see so many account management teams devoid of any playbooks that they could use. And it's a real missed opportunity.
So you mentioned earlier about coaching sales teams. So in these types of businesses, you mentioned the sales manager. Is that predominantly coming from the sales manager? Is that more the CEO, depending on the size of the business? Who does it, and kind of how's that done effectively in with regards to cadence and etc.
Right. Great question. Unfortunately, in the lower middle market, I see very little coaching used, very little. And it's an absolute necessity if the business wants to get to the next level. And you're right. In many cases, it should be the sales manager. However, sales manager in many cases is handling many different things, juggling many different balls, depending upon the size of the sales team. But coaching is really critical. And when you think about it, the best sports stars in the world, they all have coaches, right? They are not left to their own devices, and just in many cases they're being coached consistently, especially before big games. When you think about it, Q4 for most businesses it's like the Super Bowl, right? Or the for a business Q4, and yet many businesses are not coaching or ensuring that their team members are practicing effectively, using the right techniques, the right buzzwords, whatever's necessary, whether it's sales, whether it's the marketing team, or whether it's the customer success team, right, for all of the renewals. How do we know that they are ready to go and will perform optimally? They need effective coaching. So I feel like definitely the firms that are the most progressive, the ones that will grow the fastest, will use coaching. In many cases, it could be once a month. Should definitely be, and you could bring in an outside coach in many cases to supplement what the sales manager does or the VP of sale does. Um, you can, and I think it's highly advisable. Again, if they are primed and ready to go and energized effectively, you're going to get better performance.
Makes sense. Makes sense. So once this has been deployed, it's first time PE-backed business, deployed the kind of first iteration of the sales process, the sales team. What does the next level look like as that begins to go through the rounds, as it begins to get through to an exit liquidity event or even the next investment? What does kind of round two look like in making these businesses and sales process as strong as it can be?
Right. Well, again, I feel like there's always an evolution involved here, right? And so the belief that any of these functions are static in nature, I think is false. I think that there's always ways to look for improvement. For example, we look at it's very easy to just focus on revenue, high level types of KPIs. There's always room for improvement in sales and in revenue growth by looking at sort of taking a step back and looking at other KPIs. So, for example, we can improve not just with revenue, but we can improve with the number of qualified opportunities. Just by improving that, the number of qualified opportunities for sales by 10% can drastically improve growth by increasing ACVs or average contract values, by improving sales win rates or sales cycle lengths. There are always ways that you can optimize. And I think when you think about it, you can have a compounding effect. It's really interesting, actually. Imagine if you could increase the average contract value per sale by 10 to 20%, and then at the same time, increase the sales win rate by 10 to 20%. You actually have a multiplicative effect, and it actually compounds growth. So you look at the growth levers like number of qualified opportunities, average contract value, sales win rate, average sales cycles. And if you marginally improve each of them by 10 to 20%, you could see 30% plus growth in the business. So again, instead of thinking of a total transformation, growth transformation, think about marginal improvements of key growth levers like those. And so that is really that's taking it to growth 2.0, is looking at it at that level. What are the growth enabling initiatives and analyses that I can do to influence those specific growth levers? When you get to that level, you're going to see much faster growth. How can I reduce customer churn by 10 to 20%? What impact will that have on my overall growth? Considerable. How can I use pricing? So, dynamic pricing. So, a lot of lower middle market businesses look at pricing as a once a year event, right? I'm going to increase prices, by inflation or whatever it is. In reality, they should be looking at it from in terms of dynamic pricing. How can I actually look at increasing certain items that are particularly popular? Which can I be selective on certain customer types on increasing their pricing because they're not as price sensitive? So how can I use pricing, the pricing lever to grow faster as well? So I'd be looking at all of these individual growth levers, and I do on a daily basis, by the way, and how can I marginally improve them to compound growth much faster? And so there's a lot of really interesting stuff that you can do. And in reality, it's not as complicated as we think because think about it, 10% improvement, that's not a full scale transformation. Most teams can handle 10 to 15% improvement in any one of these levers. And they can do it in, say, in 6 to 9 months.
Makes sense. So we know what we need to do. I suppose who does this sit with, depending on the size of organization, scale of, I don't know, that's a bit of a lots of different answers to that. But if I'm a chief executive of a private equity backed business and listening to this podcast, or private equity firm, investor, partners thinking, yeah, we could do with some of this into our portfolio company. Who do we now look at to go, well, okay, we've got this podcast. I'm just going to send it to X within the firm. Who kind of sits within the responsibility of making sure this is deployed, holding people accountable, and coming up with the kind of first iteration around all this?
Well, I believe certainly in the lower middle market, in many cases, you don't have a CRO. The business isn't big enough. It just depends on the size, right? And how you define lower middle market. So clearly, the CEO is on the hook for this growth ultimately and owns the growth number. So I think that the CEO, whoever leads the various go to market functions. So in most cases they'll have a VP of sales, a VP of marketing, or a head of director of marketing, a head of account management. I think it's in many cases, you see growth that is siloed in nature. So they'll look at things in terms of just sales or just marketing or just account management, customer success. I think that this applies to all of growth. I think growth needs to be viewed as a system. So, and who's responsible? The CEO is responsible, but also anyone who is attached to growth. So again, that would be sales, marketing, customer success. I also feel like the board of directors would need to be very aware of this of modern go to market, right, and what's available to them. So as the CEO is presenting to the board of directors, people need to be familiar with all of the various options that are available to them to grow more effectively. What are the modern ways of doing things? And so as we talk about a lot of this, again, there are a lot of people who have to be made familiar, but it's again, at the end of the day, the CEO owns it and is responsible.
Makes sense. Makes sense. I think that gives it a good insight, certainly to the go-to-market strategy and what needs to be done there. What do you read, watch, listen to that you recommend that others should check out, please, Brian?
I spend a lot of time writing on LinkedIn. I don't know if people know. I mean, I have my own series of posts. It's PE growth headwinds and tailwinds. So that's a reference to headwinds, what inhibits growth, and tailwinds, what facilitates growth, right? So PE growth, headwinds, and tailwinds. I spend a lot of time in there, and there are a lot of great experts like yourself, Alex. I mean, you put out a lot of great content, you and your team. I do a lot of reading as well. I would recommend a book that I've read recently that has really influenced sort of my thinking. Actually, I've reread it. I read it many years ago, but it's called the 80-20 principle. Not sure if you're familiar with it, but I think it's particularly important in private equity because there's only so much time in an investment hold period. What is it, 5 to 7 years on average these days? And so you really have to think about how you prioritize and sequence value creation initiatives, including growth. And so I really leverage the 80-20 principle in almost everything that I do. Who are my top 20% customers generating 80% of value? This would be for a client or for a particular business. Where do I get, 20, what are the top 20% leads? What are the top 20% markets? Who among my team are the top 20% salespeople? Once you have that 80-20 thinking, then you can apply it to 80-20 analysis. And so I'd recommend that a lot of people reread that book by I think it's Richard Koch, who wrote it, 80-20 principle. It's a fantastic way of thinking for private equity because, again, you have to prioritize and double down on what's working. And I think it's a tremendous book that you can use to frame your thinking about growth as well.
Perfect. And if anybody wishes to get in touch with you post this podcast, Brian, how best do they get in touch, please?
Yes. Again, you can find me on LinkedIn, Brian Gustason, or you can reach out to me. I'm a partner at Craig Group, and our website is www.craiggroup.io, craiggroup.io, or you can reach out to me again via LinkedIn. Happy to connect and discuss growth and how I can help your PE portfolio.
Ryan, thank you very much for coming on to the Private Equity Podcast.
My pleasure. Thank you, Alex.
And thank you very much for everybody tuning in yet again. Till the next time, keep smashing it, and thank you very much for listening.